Today, as the Prime Minister indicated, my colleagues and I would walk you through Ethiopia's reform journey over the last 8 years. I will particularly focus on the macroeconomic reform fueling Ethiopia's transformation. But a bit of history to start with. When we review Ethiopia's modern history, a striking pattern emerges. Successive generations have exerted considerable effort to try and transform the nation, but a lasting, stable, and inclusive growth has frustratingly been elusive. During the monarchy period, that was when the foundation for modern state institutions was laid, with the start of early banking, telecom, airlines, and even some commercial agriculture. But because of the political and economic system that was based on exploitation of the majority by the very few, growth remained narrow and unevenly distributed. So in that context, it was impossible to rally the whole public behind a national development goal. Then came the Derg regime with centralized planning because of the communist ideology. Though there were some strides in terms of land reform and literacy expansion, the heavy hand of the state, owning all means of production, weakened private incentive. And there was also excessive militarization. You would recall the mantra back then was everything to the war front. So it was impossible, again, to transform the nation. In fact, this was a period of stagnation as opposed to progress. EPRDF took a different approach, fueling rapid infrastructure expansion, periods of economic growth. But this came at a heavy cost, leaving behind very serious macroeconomic imbalances. To give you a snapshot of these imbalances, inflation was stubbornly high for decades. External debt was rising, putting the nation through serious external vulnerabilities. FX shortage was the defining feature of the Ethiopian economy. The distortion so deep that the gap between official and parallel market was more than 100%. The private sector was crowded out. If you look at the state-owned bank, CBE, 80% of its loan was going to state-owned enterprises. On the fiscal side, it was not just about declining tax to GDP ratio, but there was serious lack of fiscal discipline. Overall, as the Prime Minister was painfully explaining earlier, the state formation was incomplete. It was impossible to build a stable, unified nation. State capability expanded very unevenly across regions, sectors, and institutions. As you all know, long-term stability depends on stronger institutional cohesion and economic integration, which was lacking. That is why a sweeping reform across political, social, and economic spheres was an utmost necessity. So, 2008, the reform government took a fundamental policy departures from prior arrangements, reorienting the Ethiopian economy. Let me walk you through some of the departures. The approach taken was pragmatic, adaptive. A serious effort to try and understand the Ethiopian economy and find a solution from within. Dr. Brook would say more about this later. And political economy issues gain prominence. Gone are the days when Ethiopia was divided into center and periphery, marginalizing half of the population. So everyone was invited to the table to decide on the future of the nation so that growth can be inclusive and everyone can have equal opportunity. A lot of work also went into broadening the source of growth. We'll discuss some of these sectors today. Digital, mining, agriculture. My colleagues, Miriam, Hannah, and Dr. Mandafro would walk us through this. We'll talk about different approach we took about urbanization, Tigist will discuss that. In terms of leadership commitment, you've heard it, but let me just say two things. One, this discipline to plan beyond one electoral cycle. It's not about winning election. It's not about when somebody is in power. It's 10 years, 20 years, 30 years ahead of time that we are planning. And the commitment to make it work this time around. And macro stability gained prominence. You know about the homegrown economic reform program that we are implementing since 2019 with 3-4 pillars: macro, sectoral, structural, and public sector reform. At the core of this reform is macro stability. Macro stability, for a change this time around, is considered an essential ingredient for quality and sustainable growth. If I were to summarize the macro regime shift, is a move from quantity control to price anchors. Exchange rate was administratively allocated. It's market-based now. Monetary policy was more quantity-based with fiscal dominance. It's interest rate-based with price stability focus now. The fiscal policy was deficit tolerant. Now it's based on credible consolidation anchors. The FX allocation was based on rationing and surrender rules. It's allocated by the market now. Inflation was more ex-post management. The central bank playing more of a reactive role after the fact. Now it's based on expectation anchoring. It's the central focus, the central agenda of the central bank. Price stability has become a core mission. Let me walk you through some of these reforms briefly. On the fiscal side, there was a ban on commercial loan. For the last 8 years, I say this proudly, we've not borrowed a dime of external commercial loan, not a single dollar. And a lot of work went into debt restructuring, which brought significant gain to the nation. Budget discipline was strengthened, but without losing sight of important social spending. Just to give you some of the numbers, revenue has increased 8-fold from about 235 billion to 1.83 trillion by the end of this year, government revenue. And this downward trend on tax to GDP ratio is reversed. 3.3 percentage point gain in tax to GDP. That is like over the last 3 years alone. That is almost 1 percentage point every year. As far as digital compliance goes, a lot of work in terms of modernization, the tax system, e-filing, that helped strengthen collection efficiency. Budget deficit. The primary budget deficit has reduced significantly from 2.5 percentage points to less than 1%, 0.4% last fiscal year, 24-25. And proper spending, as you can see on the slide here, has proportionally increased. We've maintained proper spending as total expenditure increased. In terms of public debt, as you can see here, Ethiopia's public debt was higher than low middle income countries back in 2018 and comparable to sub-Saharan Africa average, but now it's significantly lower than both. So our work in fiscal discipline, debt restructuring, and gains from macro reforms has restored Ethiopia's debt sustainability. IMF would announce after the review we expect, but Ethiopia's debt is now sustainable. But even more than that, medium to low debt distress is within reach in the next year or so. So what does this mean? This improved debt sustainability and risk profiling is positioning Ethiopia as a credible and investable destination. On the monetary policy front, There is a shift to interest rate-based policy framework with introduction of the National Bank policy rate. And then there is an end of direct central bank financing of the budget. Again, 24 months and counting, the central bank did not lend a birr to the treasury. In terms of modernizing the monetary policy, open market operations are institutionalized, and the monetary policy committee is established periodically, every quarter, deliberating on policy issues and recommending to the board policy actions. And this, as the Prime Minister indicated earlier, has resulted in significant and sharp reduction in inflation from high 30s, 34 to a single digit back in February. Of course, we have a challenge the last couple of months, as you all know, because of the Middle East conflict. There's inflationary pressure, but the commitment to keep this trajectory is strong. We'll maintain that policy goal and work to achieve it. In terms of modernizing the monetary policy, the central bank is now balancing, maintaining the money supply in the economy, managing through many market operations. This 1.5 trillion is a significant number. It means the central bank is regulating money supply periodically, selling and buying based on inflationary trend. And the interbank money market is really a phenomenal achievement. Before this, 3-4 years before, asks the CEO, they are here during the break, they are to call each other to try and get loan when they face liquidity. Now they have a very vibrant market. Just 2 weeks ago, this market has surpassed 3 trillion in transactions. On the external sector, exchange rate liberalization has allowed the market-based FX allocation, which has significantly improved Ethiopia's competitiveness. As you can see here, because of the reform, export is incentivized. Ethiopia's export products are now globally competitive. Remittance have increased significantly, over 17% per annum. But when you look at export, the change is phenomenal. Look at this number. Export was just 2.83 billion back in 2017-18. Last year, 8.33 billion, which is a 194% increment. But the most telling story is this year. We expect to reach 11 billion or a bit more. That means in 1 year, exports have increased by about 3 billion. That's what we had historically before the reform. We couldn't even reach that maximum. But now in a year, about 3 billion additional export. Then a threefold increment overall. Sometimes argue, look, this export growth is because of favorable global market prices. Yes, commodity prices have increased globally, less over the last few months. But when you look carefully, you see a structural break after the reform. There is also a volume response because of the policy change across all sectors. Agriculture, coffee has increased by the volume by almost 100%. Mining, gold, 1,300%. Industry, capacity utilization has increased. I'll come back to this. Electricity, volume has increased by almost 500%. So it is not just fortunate global prices. It is a result of a policy reform. It's a response, it's a structural break after the reform. Remittances are also moving in the right direction. Cash remittances increasing, underground transfers decreasing, but I note we have more work to do in terms of formalizing remittances in the years ahead. On the financial sector, I would want to highlight few reform areas: the central bank reform itself, banking sector reform, the broadening of the financial market, digital transformation, and establishment of independent insurance regulator. The central bank, the internal institutional building work is significant. with this new NB proclamation, one can say the central bank is created anew as an independent central bank focused on price and external stability. And our desire to modernize the banking practices is clearly indicated in the new banking proclamation that introduced very modern practices. Transparency-wise, I know you know about the Financial Stability Report, our flagship annual report that assesses the health, risk, and resilience of the financial system. It has become now a go-to document when anybody wants to understand the working of the financial industry. Central bank is now audited by international audit firm, and this audit report is published regularly every year online on our website. Internally, a lot of capacity building and modernization initiative to create an autonomous, independent, but very strong regulator. The organizational structure internally is massive. Let me just give you a couple of examples. We have created 2 new roles: Chief Technology Officer and Chief Finance and Market Officer, to make sure these important agendas are properly managed by pertinent individuals. On the broader financial sector and market development, the establishment of ES6. I'm sure you agree this is a watershed moment correcting this void. Ethiopia was, weirdly absent in the capital market compared to its peers. An economy of this size not having a capital market was a big void, and that is corrected with establishment of Capital Market Authority and then ES6 later on. The insurance sector was underdeveloped in Ethiopia, admittedly. In fact, people in this sector say it's an orphan. The central bank only focuses on banks. And understanding this, the reform government had made a decision to create, to establish an independent insurance regulator that would drive the development of the industry. On CB, I want to take a minute or two because it's really important. Before the reform, because of that SOE lending, Commercial Bank of Ethiopia was sitting on more than 845 billion non-performing loan from SOEs. This, I'm sure you agree, was a recipe for financial crisis and probably a full-blown economic crisis. But because of the bold measure taken by the government, the Treasury has taken over this significant amount of loan and replaced it with a new government bond. On top of this, CB is recapitalized threefold. Its capital increased threefold. And major reforms were also undertaken to develop new business models and governance framework. Now, as industry actors would witness, CB is more of a source of stability rather than a potential source of crisis. On the banking sector in general, we can say the banking sector collectively reflect very sound asset quality and effective risk management. Look at these numbers. The central bank sets non-performing loans at 5% max, but the industry average is only 3.07, lower than the standard, better than the requirement. The capital adequacy ratio is set at 8%, but is much higher at 19.1%. Industry average liquidity ratio is 30.43%, double that of the minimum requirement by the central bank. Overall, when you look at the industry, not that you remember all these numbers, but I really want you to look at the magnitude. Bank assets have increased by almost 680%. Deposits by 654% over the last 8 years. Loan and bonds, 3.94 trillion now, an increase by almost 540%. And more importantly, look at this. The loan is going to the private sector. out of 2.6 outstanding loans, 93.8% is going to the private sector. And if I had time, I would go into other sectors, but just I would really like to highlight one important reform, because public and private pension funds are also undergoing major transformation. Public pension funds, for instance, its reserve has reached 470 billion, an increase of almost sevenfold. And you probably have seen a few weeks ago when they have inaugurated more than 8 buildings in one day. In terms of digital transformation, Miriam would discuss this later, so I would not want to take time, but a 24.2 trillion is a significant number. This is, last week when we had a forum, remember we reported 17 billion in digital transaction. This year, 9 months alone, is 24.2 trillion. Every day, you and I, we transact about 10.6 billion on mobile money. So the decision to open a banking sector is a gradual, thoughtful, and sequenced approach. It's after creating a strong financial sector and a strong regulator. The government has decided to open up the banking sector with 3 objectives. 1, to enhance competition. Foreign banks, we hope, would drive competitiveness. 2, to attract strategic investment into the sector. 3, to modernize the banking sector through diversified offerings, accelerated digital transformation, and expanding advanced financial services. Now, what does this all mean? What are the impact of these reforms? I want to share with you 7 stories that highlight the impact of the reform. The resilience story. Over the last 8 years, we've seen multiple shocks, from COVID pandemic, climate shock, price and domestic conflicts, external shock, what have you. And these shocks came in 2s, in 3s, in 5s, multiple shocks. But because of the depth of the reform, we've managed to sustainably grow, which proved the resilience that the Ethiopian economy has built. The income growth story is also phenomenal. Income, real GDP has increased significantly over the years. When you look at per capita income, it has increased from $760 to $1,100 over the years. It's not just that incomes have grown, but the income distribution story is also encouraging. The Gini index has declined over time. As you know, the lower the index, the better the income distribution, which indicates a more equitable distribution of income alongside broad-based economic growth. The agriculture and rural transformation story. Dr. Mandafro has a full session on this, but important to know that agriculture has shifted from subsistence to higher productivity and commercialization, driven by expanded irrigation, crop diversification, farmer clustering, and a strong growth in export-oriented production. Output has increased threefold, from 44 million to 150 million ton. In terms of wheat, for instance, we are Africa's largest producer. Productivity is up 29%, farmer income up 18%. 9.5 million farmers are organized in clusters. And very importantly, the number of people that rely on relief has declined from 27 million to 3 million. Imagine the impact of this. As we help people help themselves, when they exercise their agency, when they unleash their productive capability, the pride that comes with it, I would leave it for you to think through. In terms of rural transformation in general, it's not just about growth in income, but in terms of rural infrastructure and services. Let me just give you a road density data. Road density has improved 5-fold. Distance to all-weather roads declining from 21 kilometers to 4.4 kilometers. Electricity access has more than doubled. The nation has electrified more than 1,382 rural towns and villages. The employment story is very encouraging. We notice that Ethiopia's employment trajectory is moving from periods of joblessness to sustained labor absorption, because we're doing it by design. The Ministry of Labor and Skills is created, a lot of work to bridge this information asymmetry on labor. And so every year, this year for instance, 4.9 million jobs are created across sectors, out of which about 500,000 is overseas. In terms of industrialization story, capacity utilization is significantly increasing from 49% to 66.3%. A significant enhancement in capacity utilization because of the policy measures such as Made in Ethiopia, Drive, the SEZ proclamation, and the import substitution strategy. Employment has also increased about 30% per annum, now 3.3 million. The industry share of GDP is 30.2%, an 11% increment. But this is the number I want to highlight. For the first time in Ethiopia's history, the industry sector's contribution to GDP has surpassed both agriculture and service. Have we industrialized fully? No. But are we on the right track? Absolutely, yes. In terms of investment and FDI story, Ethiopia is at about 4 billion per year, the second largest recipient in Africa, but there is caveat here. It doesn't tell us the full story. The central bank still uses the old balance of payment standard, so we're not capturing full investment. We're changing this. As of next year, we'll move to BPM6, adapting latest standards, so we would have probably a better reporting, but a 13 billion commitment at one forum, the largest single investment commitment this year in one investment forum, and some of the big announcements, Dangote Group, 4 billion in fertilizer, Global Future Investment Limited, 2 billion, Sun King for off-grid solar, 150 billion. This tells you Ethiopia is turning a new chapter for investment. Now, these reforms, the reform that I have described and the reform that my colleagues would describe more, tell us one story. These are not isolated adjustments. It's a result of a very thoughtful, systemic, purposeful overhaul of the Ethiopian economy. With macro stability restored, the quality of our growth has improved, helping us drive a 10.2% real GDP growth by the end of the year. But the Prime Minister said this morning, it's not fait accompli. Sustaining this progress would require improving on our implementation quality, building institutional capability, and building resilience to global uncertainty. Challenge that we've identified and actively working on. The Ethiopia we envision and the Ethiopia we're working very hard to build is a diversified and resilient economy characterized by rising incomes and expanding opportunity and sustainable development across generations. That Ethiopia, I assure you, is in the making. That quest, that generational aspiration quest for prosperity is no more elusive. An African lion, a beacon of prosperity is loading. Thank you.